Right now, there's a lot to be said about where bonds are, and a lot of traders are concerned about the continued downtrend in bonds. So what you're taking a look at right now is a glimpse of the top tier outlook. Now, the top tier outlook is something that's a standalone, but it's also part of the Sector Secrets Mastery. So for those of you that are Mastery members, you have access to this, plus the premium videos that come out twice a week around this. And the thing here is top tier. Let's look from the top down. And a lot of folks will say top down could be bonds, top down could be euro, right? So let's talk about the bonds, and this would be the ZB or even TLT. And what do bonds say right now? Bonds are pretty much screaming at the Federal Reserve that you're keeping rates too high for too long, even though the pause seems to be priced in, meaning we're not going to get another quarter point bump in rates. We're going to stay here at this 5.25% to 5.5% zone. When do the first cuts come? And gang, the first cuts are not forecasted via the Fed Fund futures until July of 24, the July of 24 meeting. And that's why bonds have been really, really upset. Now, what else can we look at aside from bonds? The other conversation around rates could be with what's going on with the euro, okay? The euro. And the euro is the best way to understand what's happening in the dollar index. This could be the UUP, this could be the DX futures, this could be the popular DXY. But the best way to understand the dollar is via the euro. Why is that? Because the euro is 58% of the US dollar basket. Remember, the dollar basket is what we're looking at, and euro is by far most of it. So this notion that a strong dollar is inherently bad for stocks is probably as misguided as this notion that yields are going to kill equity. So as we talk about sort of a bigger picture before we kind of dial it down to individual opportunities, let's do this here for a moment. I'm going to squeeze in what's happened in yields throughout this year. This is 2023 on a daily time frame. All right, here's your 200 exponential moving average. We have spent next to no time above that. All right, all year long below that. Most of this second half of the year has been in a downtrend, right? This is very much a picture of yields going up. Well, let's switch this on over to the NASDAQ. If yields going up is the death knell for equities, no one told the NASDAQ, right? These almost look inverse. In the world that people tend to live in and dogma, it's higher yields kill the equity markets. That's just not panning out at all, right? It's not just the NASDAQ, it's the S&P too. Right? It's hard to call this a dramatic downtrend. For as much as the euro has had a hard time above the 200, right? Which is to say the dollar is strong. Remember, whatever I'm showing you on the euro, the inverse is happening in the dollar. The dollar's up, so are equities, generally speaking, right? What about bonds, right? So bonds are heading lower and euro is heading lower. That means yields are heading up, dollar's heading up. And yet again, NASDAQ's holding on. And let's talk about NASDAQ from the perspective of what happened today in NVIDIA. NVIDIA spooked the market early on with the news about chips and China. And while NVIDIA had a rough day, the bargain hunting that will continue to happen in the NASDAQ, mainly the XLK and the XLC. Now, one of the things we touch on in this issue of top tier outlook is which sectors should we focus on, which indices should we focus on. My favorite sectors continue to be anything around oil. XOP, oil and gas services, is taking on a very nice leap higher because crude oil remains supported and natty gas is now in an uptrend. When we talk about the markets, gang, remember, we're not talking about the buy everything markets. That's a very rare occurrence, right? I know we all wish for the halcyon days of 2020, but that's just not what we've got. So remember that we need to be specific about relative performance. And relative performance right now at the index level is NASDAQ to the upside and XLK and XLC. I will add in XLE, XOP. I think they're actually really good relative outperformers as well. And as long as crude oil is supported and natty gas remains in an uptrend, XOP is a great place to start to add to your bullish interest as we wind down the year. Right? It's not too soon to start thinking about where is window dressing going to take place? Where is the bargain hunting going to take place? So right away, we start to ask ourselves where our best bets are for upside. And that's going to be exactly what we've talked about here. Now, the flip side of this, right? The question I always get from traders is, Rag, how do we know what's going to have the best follow through? And this is something that we can all do when we understand the connective thread between index, sector, stock. And so I'm going to show you something we do in the mastery. And that is, again, sector secrets mastery. That's the secret, right? The sector. What is continuing to be strong? If I look back over the last 3 months, XOP, XLE, OIH, and there's communications and healthcare. Okay, so that's your crude oil group. That's things like Exxon, Schlumberger, Halliburton. There's XLC. That's Meta. That's Google, right? Now, if I look back just quarter to date, take a look at who's sitting atop there. XLC, XLK, XOP, XLV. Ask yourself, why is XOP up there? It's going to benefit from crude and from natural gas. Why is XLK up there? Well, that's the number one weighted sector in the NASDAQ. And some of the best bottom picking, bargain hunting we're going to see is likely to happen in Apple. Apple had a very tough late September to early October and had a very tough time. It's back above the 200s, back into a neutral environment. And is there anyone who's thinking that as the year goes on, Apple is not going to be a place for bargain hunting? It already is. Microsoft is again much stronger than Apple in terms of the higher highs, but this is going to benefit XLK. So my index players, if you're looking for follow through, it may not be at the index level. You might have to get a little further down the food chain to the sectors and to the individual stocks, right? And so I hope this walks you through a number of things that can guide you for the rest of this year. These are actually guideposts for your career, quite frankly. What is a dogma that we have to discard? And what is relative performance and where is it right now? And this is where it's at. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.